The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger. Whoa, what a way to start. (2018) a little bumpy. Thought I'd grab a drink of water just before we started. And here we go. Have another little water. All right, get that voice. There it is. Okay. Hi, everyone. Happy New Year. Basil Chapman, Tiger Technicians Hour. Let's get started. S&P E-minis up 14 at 2690.25. All-time high. Spiked Friday to 2698.25. 25 cents over the high that was made back on the 18th. It took 7 or 8 sessions before it could do that, but it failed at the end of the day, plummeted by the end of the day, and now all of a sudden we've got a really strong rebound starting in the futures last night. Not bad. They went up 3, and then they went up 6, and then went back to up 3, and then this morning they just kept getting stronger and stronger. That's really important in a couple of reasons. So we'll do this. We'll go through all the start of the year, start of the week, start of the day, start of the month. This is what we're looking at. In the monthly chart, the MACD, this is the, let me just do this here, get this away. And let me go to the S&P, because a lot of people look at the S&P. So let's just start off in the larger, the 500 S&P. After 7 sessions of really struggling but not breaking down, just cannot make a new high since the high of the 18th at 2694.97. The E-mini, so the S&P cash, spiked on Friday, couldn't get to a new all-time high above the high that was made on the 18th, 2694.97. Let me just type that in, 2694.97. And what happened was it spiked sharply high and then it closed below the 9-period exponential moving average. So this is the daily. The MACD went below the fast-moving average. The green line went below the slow-moving average. The stochastic went under 80%. On-balance volume was not very good. So as I looked at it, I said, and this is what I sent out a lot of charts over the weekend, and basically what they were saying is that many of the daily charts of all the top indices were showing signs of weakness. The weekly charts still were very strong, but this is a very important week for those particular indices. Why? Because for some of them, they did not make new highs last week. Therefore, this week would be confirmed that there's a second week of weakness, W-E-E-K going to W-E-E-A-K. And what we're looking at is that the monthly charts are still really strong in Ds and Es, and that if there is a new high made in January, those monthly charts extend now to 2018, to the first month. So this is what we're looking at, and it's really important for me. A close under 2680 at this particular point on any day this week would suggest that the S&P, yes, is going to find weakness, and that weakness could stay for a little while, and we'll have to watch the weekly chart very, very closely, because the weekly chart has a very strong MACD, the moving average convergence right there. The middle chart is the weekly. The stochastic is pulling back, but still really strong at 94%. And the on-balance volume has turned down a little bit, but it's way at the higher level. And even the RSI, that's this little red, the red lines right there, is strong. And therefore, we don't want to fight a particular larger trend. So it's a daily that's really going to be very important. When you look at the Dow, so parameters, a close this week below 2680 suggests that, yes, we're going to retest the low of Friday, and a close above 2694.97 says, new all-time high. We could have a high-level consolidation as another rotational aspect takes place. Why do I talk about the rotational aspect? And one of the things I'd said for my subscribers over the weekend was that in my overview section, if I can just find it right here, what I'd said was this push, we have these 1, 2, 3, 5, I call them the 5 quadrants. Overview on market today, some caution prevails. And one of the reasons is that the VIX index spiked sharply to 11.06 in a leg F/B on Friday. That particular move to the upside, an 86-point move, a 0.49% move, is really unusual for this VIX index over the past. It just hasn't done that very often. And if it does that and it spikes to a DE or an F, you've got to be careful, because that is, what I said was too much too soon. While the last close of the year for 2017 was rather ugly, one glance at the 120-minute VIX volatility index suggests the leap into the 11s so suddenly might be a tad overdone. Very near term, that is. So this is what we're looking at. We need to get rid of some of this overbought nervousness, a little bit of sanguine action. Says, okay, now we're going to watch that VIX even closer. We'll watch all these different indices. I want to get rid of this for the moment and say, okay, so let's move on. And what we're looking at here is that within the context of this rectangle formation that was forming in the S&P, you can stay in a rectangle formation a lot longer than your patience. So let's watch the parameters very closely. The bigger picture is that a close below Friday's low of 2673.61 starts a deeper downtrend, I believe. So until that happens, we're looking chop, chop, chop. Dow, INDU, Dow's up 45. It was up 115. It didn't take out Friday's high, but it did take out Friday's 2470, 24,719.22. 24,741. So this morning we gap up off the low that was made. Yes. So we've got an inside day for the Dow. But I have to tell you, the MACD and stochastic are suggesting, certainly the MACD is not so much the stochastic just yet, but the technicals are suggesting that there's a good chance that this rollover, I call it a rollover, in the 9-period exponential moving average, that black line, is suggesting that the Dow is starting to see a lot of resistance, and that there's a really good chance that the Dow is going to make lower highs and lower lows. Even if there's maybe one spike to the upside, we do remain short, and that's the way we're looking at it. If we go to the QQQ, the index 100, huge move up here, 2.275, much bigger than the sharp pullback yesterday. One of the things I had drawn for subscribers, because we were short, we're not short anymore, we got stopped out for a break-even trade, was that there was a pattern that I call the Chapman Wave falling axe. It says if you can break above the green line in this case, you can go 1-to-1 to the upside, which we've just done. Will this be a continuation pattern to new highs? Have they had a 7 or 8 day or 9 day rest and the Qs are going to rally? I'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So let's get back to, the QQQ is at 158.04, needs to go above 158.77. Question is it going to be able to do it right now? Because there wasn't a very sharp sell-off in the E-minis last night when the market opened overseas, and you had upside action, that in essence makes a difference, because if there was a -6 to -8 in the S&P E-minis and the market was down right now, that would suggest very strongly that the consolidation into January has already started. This is going back to the whole thesis of rotational action. We're still long steel, the steels are acting very well, still long banks. Banks are holding pretty well. Added another long to the position. So this is a rotational market. So you can't, in essence, you're not looking at one of those 95% sharp sell-offs, what I call the Granville sell-off of the old days, where when the market pulled back, it just took almost everything with it. We're not seeing that. We're constantly seeing the same as we've seen for the last year. Even now, we're seeing this rotational aspect, and that's very important to keep in mind. So the QQQ above 158.77 says, nope, something else is going on. The tech sector has had a pretty decent pullback in some of the areas, and now enough techs are rallying to be able to have this move. Question I had about the SMHs, let's include that right now. SMH, semiconductor index, is at 99.85. This is good action, but the weekly chart is still suggesting that this should fail, and should fail fairly soon. I'm totally wrong about the failing if the SMHs, as I say, 99.85 up 2.04 right now, breaks into the 101.70 to 102.30 area. That'll say, no. We've had the consolidation from 105.83 down to 95, one of the biggest consolidations the SMHs have had, and now we're going to try to go back. That's the way I'm looking at it. Let's go on. If you look at the IWM, also having quite a big percentage move, up 0.79%. Of 121 at 153.67, still stuck within this range. You see this declining trend line, this great, it couldn't break above it, and even today it hasn't. So we're watching this as a clue, because if it starts to fail and goes below 150 at a 154.70, that's really good action. at 152.70. It says, nah, it just doesn't have the strength. So we're going to be watching that. I want to add the IYT right now, the transportation index. This is the iShares trading at 193.84. Nice bounce. 194.28 is the level to break. It's got the rectangle formation. This one I'm watching really closely because if the transportation index breaks into the 196s this week, it's saying, no, we're not having the pullback just yet. There's still tremendous buying coming in. We'll see. I want to continue to the crude oil right now. Crude oil is down 15 cents at 60.27 leg C. Should make a leg D, and it's got that one-to-one expansion, and it's got the left side, right side price time match. Last week was the exact time match to the low that was made from the high of the week of the 16th of December at 59.63, plummets down to the low that was made the week of June the 23rd to 43.42, and the number of bars to the downside to the number of bars to the upside took you to the high last week, went right through, it went to 60.51. So now the key support will be this breakout level of 59.63 on the 16th, the week of the 16th of December of 2016. So that's crude oil. I want to now go to gold. Gold is having another big move up today. It's extended leg A. So I had a question come in. Not a question, it's really a big exclamation mark, as if to say, please explain on the radio why we should follow Chapman Wave after the huge miss in gold and constantly not believing the move day to day. Kevin. So this is the answer, Kevin. First of all, I was looking at the dollar, DXY, and the DXY at that point, starting on the 27th of December, was pulling back and just touched the, hadn't yet that day, it did during the day, touched the uptrending trend line support, and then it broke down. So now all of a sudden I'm looking at the GDX, which I wanted initially to buy, and then I said, no, we're going to step aside for a day. Well, look what happened. Once it broke out on the 20th and the 21st, the weekly was still extreme. The weekly chart was still very weak technically. The daily chart did, and I even said this, the daily chart is doing what I would like to see in the Chapman Wave. It went from under 20% in the stochastic to over 20%. There was a sharp breakout move. That's the move of the 20th to 21st, and that was good. The MACD was good, but there has not been a single day pullback in which to decide that that's where I want you to get in. So it's not like the chat. You don't have to believe in the Chapman Wave. That makes no difference to me or the Chapman Wave. The fact is, if you follow the technicals, this is exactly what I was talking about. And I did say, I've missed it, and I'm waiting to get it, and I couldn't get in because it hasn't pulled back enough. And that's it. So that's what happens. I mean, you've got a technique, you follow technique. If you don't get in the correct time, then you wait for the next opportunity. So that's all I can say there is, I'm sorry, I missed it. I apologize for 3-4 days. I've been saying I'm sorry. It just hasn't pulled back. And one of the reasons is that the USD JPY had held pretty darn well. And that had been in some ways a leader for the Dow earlier when we got that low on the 8th of September, where we went along the dollar. That was the Chapman Wave in its essence. We got the exact day of the low after 70 weeks of a consolidation up and down. So all I can say is, you do the best you can. So, and not all the gold stocks have actually moved up spectacularly. They took off very well, and now they're stalling. So we're going to have to be watching that very closely. But definitely, I'm not arguing. I'm saying that this is a great move, percentage-wise. Only now is the MACD and stochastic in the weekly chart start to improve. Look at copper. Straight up, never gave you a chance. But when it does give you a chance, then you're going to have a look at it, and this is it. But do I want to buy copper at a peak C when it's got a D and then it might pull back deeper? I'll have to make that decision. So here we are. So let's go on, and we're going to look at the EUR USD. USD is, in fact, in a strong leg D. It did that left side, right side price time match. And in fact, it's got the cup formation in the weekly chart where it wants to test the previous high back in the week of the 8th of September. That's when the dollar gave its signal. And this is that was the high in the euro at 1.20291. And that was another reason. If you remember, the euro, which likes to often trade in the direction, not the same percentage, but in the direction of gold, was in fact stalling. It was only last week that it really showed good strength. And this week it hasn't yet made the new recovery high to make leg B in the monthly chart. So I'm just explaining what I'm looking at. So we'll be back. We'll look at bonds because the TLT is down $1.60. We'll go through many of the other indices, and we'll look at the weekly and monthly charts coming up because we want to be looking at 2018. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Everyone, we're back. We're looking at bonds of TLT, the 20-year Lehman ETF, trading at 125.22, down $1.65. This is a pretty big move to the downside. Now, what's really important about this is that it keeps the yield in the trading band, with the bond itself being trading between 128 and right here, the 123, the 200-period exponential moving average. So this is going to be very important for yields. So the question is, in the what am I looking at in terms of the yields? Well, the TLT made a peak D in the 120-minute chart. In the Chapman Wave, we're always looking for D, the fourth highest peak, where other things can happen. That's where it can change trend. It certainly changed trend right there, at the double top of 128.59, going to the close on the 15th of December, pulls back very sharply, it gets a little doji low, and it starts again. It goes peak A, peak B, C, and D. Gets a second D on the just before the close on the 29th. That's on Friday, and then it pulls back very sharply today. So that's a demonstration, at least of the technique going to a D, and other things can happen at a peak D. Now what we're going to do is we're going to look at, I covered that. Yes, so I had a bunch of questions. I wanted to show something that I think UNG I was asked about. UNG is trading at 6.01 up 18 cents. Here's another one. This is one that we tried to get in from opening call subscribers. We wanted to pull back this morning, pull back a tad, not enough, not in. It's at 6.01. Natural gas is moving very nicely. It's gone to a leg F in the 120-minute chart. A single leg A up in the daily, single leg A up in the weekly, hasn't yet made an A in the monthly chart. So this is a good sign for natural gas to say, yeah, I think it's going to participate in this terribly cold winter, and it should be moving higher. I don't know how high, but it should be moving higher over the coming couple of weeks. Let's go to Greg in Boston. Greg, how are you?
I'm well. How are you?
I'm well, thank you, and a Happy New Year to you.
Thank you. Happy New Year. Well, hey, I believe in the Chapman Wave, and that's why I bought ACBFF when it broke. Well, it was about to break over that left side high 2 days ago at
Yes.
686. So the reason for my call is I was wondering if you could give me wave count on the 240-minute. Do you see that as a B or an F? That's
So give me
kind of where I'm
1
at
second,
right now.
75, 70. Okay. The reason why I just wanted 1 second there was I want you to get the weekly, and the weekly is at A, B, C. It's in leg D right now. I believe that's correct. I'm doing a little quickly, but I think that's, yep, leg D. What's going on now with TradeStation? That's unusual. But that's okay. I'll figure that one out. So that's your D. Okay, here we go. So 120-minute chart. Here we go. So the idea, of course, is always to get the lowest, most identifiable low bar, and 5.820 and 5.85. Great. That made that one easy. So we've got a very quick peak D that was made back around December the 12th. So A. Oh, I've got to do that each time? That's very unusual. All right, well, we'll have to find out what's going on. C and a D. So it pulls back. Yeah, we go. Start a brand new one. We have to identify the lowest low. 539. Let's go to 541, 544. Okay. So if I'm not mistaken, 5090, 5480, 547. Here we go. So I'm going to call that. Did you get the low, the next low that you started in the Chapman Wave, the low of the 18th, 11:30 from 5.5090? Because if you did, then we've got A, B. Unfortunately, I've got to click on the letters each time to get the change of letter. C. So this is leg E. Do you get a leg E in the 120?
I'd have to switch back to the other screen, and I can't.
Okay, all right. Well, that's
answer your question, but
I'm pretty sure
that looks correct.
Yes, that's what I've got. Okay, that's what we really want you to know. So here are a couple of things. First of all, this is Aurora. The full name, if I can see it here, is Aurora Cannabis Inc. Trading at 8.7290. It's up $1.09, up 14.4%. So this is, so you got into the 6.80s, right? No, less. You got in lower.
Before it broke out, before it broke over that left side. So.
Yeah. Okay. You know, this is one of those cases where I would. You see the weekly that if you had got in somewhere around 4, you'd still be holding, and even though it's about 2 months or about 6 to 7 weeks. That's a very long time for a stock that's moving so quickly. And I want to just see the volume here. This is huge volume, 9.9 million. Already today is 5.1 million. With 2 hours, 3 hours, this could be another good volume day.
Lots of volume.
I'm thinking that this is the way I would trade these. If you're in much lower down, I try to keep the core position, and I would have a trading position right now that I would try to trade in and out of. Preferably stay in, but this is the one that I'd use as a trading position. So the low today is 8.06. So I'm thinking you've already got a very good gain. It looks to me that if this is a brand new buy signal to buy mode and it's at 91% in the stochastic, the MACD looks outstanding. It looks to me that I would want to keep this even longer. So just for today, and it has a way of, once it starts its propulsion to the upside, it seems to stay in the higher range. So I would try to keep this, and if you have enough and you're able to say one part of the position will have a stop, it might, I could gap down tomorrow, we don't know, but this is really very strong action, even with a 120-minute chart being in a leg E. The MACD there is very good. Stochastics at 78%, not confirming the strength as much as I would like.
Right.
Mr. Leg D, wait, I don't know where he said that, 1235. That was from an early one. I missed a leg. Mr. Leg, I'm not sure if that applies to what I'm looking at here. Peter, if you can tell me where it is. The way I would do this is I would take one part of my position and I'd have a stop. It's at 871 right now. I'd probably put the stop halfway into the wick of this candle, 8.36, and that's just on part of the position. But what I would say to you is if it takes out the high of the day, if it goes even higher, above 8.770, are you able to watch this during the day?
Right. Yes, I am.
Okay, then I would have a trading stop. So the trading stop we've got now is something like 30 cents. So I'd have a 30-cent trading stop. If it takes it out, I just keep raising that stop, and I'm saying to myself, I'm sure you didn't expect quite this action today, breaking above that long-legged doji of Friday. So this is a bonus. I would try to stay in as long as I could, keep a core position, take that 1/3 position, or whatever it is, take it and have a 30-cent stop below what it is now, and keep it as a trading stop into the end of the day. I hope that helps you, Greg.
Thanks a bunch.
Thank you very much for calling. I appreciate that. We'll be back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Greg, if you're still listening, I want you to just clarify something. I did want to go back to my original notation to see what I've got in ACVFF. This is Aurora Cannabis Inc. And the way I've got it, it went to a peak. Everything about it looks like it's a D. I don't know if I'm missing something or what, but it looks like a D, but it is an actual C at the high that was made on the 28th of November at 6.860. Pulls back sharply, and then it started a brand new buy mode. So these are gray letter A's. But once it broke above the high that was made at 6.86 on the 28th, I have to consider this is a D/B. And everything about it looks like a B. So I'm not changing anything that I said before. I just wanted to clarify the Chapman Wave notation. And so that's pretty exciting. And in terms of the, there we go, in terms of the monthly, it's only on leg C. That's why I was saying to you, try to keep the core that you have. Let's see if we can, at least let's see if you are able to keep that core for a longer period and just have trading positions. I think that's the best way to trade it. So now what I want you to do is I've got a couple of other questions about the SMHs, the SOX index. I'm going to go to the SMH. It's the trading vehicle, the ETF. Very strong move. Spikes up to the 99.97 level, trading around now at 99.72, a little bit below. The MACD is okay. The stochastic is not very good. On balance volume is very strong. So I'm going to be watching this real closely. My impression has been that there's going to be a failure in the tech sector with the semiconductors leading. And as a result, we will go chop, chop, chop with lower highs and lower lows. I'm not talking crash anything yet, but I'm saying lower lows and lower highs in the semis and many of the high techs. Intel had a spectacular move, then it sort of stalled. It went to a peak B, and it's in a leg C in the weekly chart, and a leg E in the monthly. What's interesting is that leg C in the monthly is at an all-time high. So yeah, I have to consider it's going to go to a D. But Intel has a way of being very different to let's go to something like an NVIDIA or one of the top stocks in the sector. Look, NVIDIA was making highs when Intel was failing. Intel's now rallying, and NVIDIA and Micron Technology, which spiked with that news-related gap up and then failed. It's made a peak E in the weekly. It looks just like the SMHs. And only a leg C in the monthly. So I think this is going to be a digestive phase. That's the way I'm looking at it. So I could be wrong about it because we're in the middle of the range, say in MU Micron, trading at 42.95 of $1.84. The low is 39.07, and the high, that take out that at any point in January, that's very negative. and break above 46.80, that would be very positive in the weekly chart. Those are the parameters. Next question I had was Apple, APL, trading at 171.29, up 2. It was still in a range under the 9-period exponential moving average. I think Apple is a mature company. It's in peak C, leg C in the monthly chart. Should still go higher. I just think of it that you have to consider that Apple is now more like a dividend, a very strong dividend type stock. So think of it that way. It still says that the high that was made at 177.20 back on the 18th of December, which was below the high that was made in the 8th of November at 176.64. It's 176. Oh, it went. Oh, that's right. It went slightly above that. So the all-time high was 177.20. It's just digesting that. But I suspect that Apple, until it breaks 166 on a closing basis, this is just chop in a trading band. And a lot of these stocks are doing that. Next question I had was CVX, of course, Chevron, trading in leg E. Very nice move to the upside. Let's see. It broke out in the cup formation, and this is very strong. Leg E in the weekly, leg E in the monthly, and leg E. Leg E, daily, weekly, monthly. Fascinating. Starts off the new year with a new recovery high. Yeah, looking very good. And it has tremendous support at 121.57, the 9-period exponential moving average, looking out as if it was, if it had a deeper consolidation. So this is very good. And that breakout that it had back on, from those doji candles, the one that had really started back in around the 29th of November, that was quite spectacular. And then a sideways rectangle formation, breakout above. So far, this is very good. Next question I had was, oh, there it is. Let me just see what this says here, if you don't mind. Oh, hi, Basil. Other radio people will take a teaspoon of honey before going on air, for what it's worth. Great shows. Well, thank you, old G. I appreciate that. Yeah, I was doing fine. I just at the very last second, I thought, yeah, let me just get a drink of water. And then it went the wrong way. Not a good way to start 2018. A shaky start to 2018, but recovering well. So here we are. Now, I want you to look at the XAL. This is the airline index. And then I want to go through a bunch of things. So it made a peak E/B in the weekly, in the daily chart. This is still a leg C, no, peak C in the, oops, no, it's a leg D in the weekly chart, and it's a cup formation. So I want you to take just a little time to go through in the remaining time that we have. The daily chart I'm going to put in here as E/B. The pattern that we saw, this pattern, I love this pattern for breakouts. It doesn't say you're going to go to a new high, but it's just really a nice pattern. Look at this. You've got this declining channel just stuck within an exact trading channel. Look at that. Highs and lows, doesn't break out. So if the XAL, the airline index, at 118.03 up $1.21, suddenly spikes to 118.70 something, there's just a really good chance it's going to take out the high of the 21st of December of 117.64. No, that can't be right. Of 119.39. Sorry. How can it be lower than the one we just looked at? 119.39. So that's what I'm looking at. Weekly chart is improving. The technicals are good. They're not great, but they are good. And the monthly technicals are improving as well. So this is going to be very important. So you put it together with USO, and the USO in leg D, with that left side, right side price time match breakout, which is, remember, a different chart to the BNO, which is the Brent. Brent is more stronger. It's in leg F. Could be an alternate count, but F with the MACD strong stochastic at 92%. This is really good action in the oils. And leg F in the weekly and leg C in the monthly. See, this is the one that that people have spoken about for a long time, saying our crude oil price is different to your chart, is different to yours, and I couldn't understand. I said I have to go with mine. Well, I went with mine, and it is a different chart. The crude oil chart has only just broken out to a new recovery high above the June 2016 high, but the BNO has been much higher. I'll be back. Basil Chapman. We'll look at some weekly and monthly charts when we get back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Don't forget, Steve coming up. Then you've got Dave White. You've got Tom O'Brien. What is today? Tuesday. And then, of course, you've got Andy Hack. So, BNO is Brent Oil, United States Brent. What exactly is it called? Brent Oil Fund. This is a very strong move, walking the 9-period exponential moving average, getting a little tired, but at 18.07, down 3 cents. It's got very strong support in the 1790 to 1770s. So we'll see what happens if it does take a bit of a breather, how it impacts the airline index and the transports altogether. So now let me just do this real quickly. We've got just enough time to do the Dow. The Dow has, if the Dow closes at any point this week, we're going into, let's give it a week and a half, into early next week. If it closes under 24,650, that's going to suggest strongly that a choppy lower highs and lower lows period is going to unfold in the Dow. The weekly chart, let's just leave that alone. It's outstanding action up until now. Just 3 tiny little candles. Of course, today just started. 2 tiny candles, and we have an inside day. If you look at the S&P, SPX.X, we're looking at almost the same thing. Had a slightly higher high today. Still hasn't taken out the old high of 26.94.97. Trading band. This could go on a little while longer. So it's if the S&P at 26.89 takes out 26.80 at any point in the next couple of days, closes below that, and then closes below Friday's low, says, nah, lower lows and lower highs. In all cases, new highs would suggest that there's a high-level consolidation, and the rectangle will continue with slightly higher highs, trying to treat the base as a bounce of trampoline support area. So I've gone through the currencies, I've gone through that, The silver I didn't do. Silver is trading up. Also in legs, see, actually, it's very strong. It's above the 200-period SMH, a simple moving average, and the 200-period exponential. And at this point, I would start to think of it going chop, chop, chop between 17.35, 17.38, and 16.83 if there's going to be a consolidation in silver. So thanks for being here. Check out my opening call and my daily newsletter, comprehensive newsletter. Stay tuned for great programming coming up. And thank you for being here. And happy 2018.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.